Our next guest has moved the markets twice this summer, the first time by raising prices and fanning some fears of inflation, the second time by agreeing to buy Roman Haas for $15 billion and trying to save the market in some way from some summer malaise. Andrew Liveris is a longtime friend to Squawk. He's the head of Dow Chemical, the nation's largest chemical company. He joins us here in Beijing. Great to see you.
Thank you, Carl.
It's always good to have you, but it's nice to see you in person even more.
Yeah, me too, me too.
Let's start with some of the price increases, which
Sure.
everybody knows about, is on the cover of USA Today. You did it at a time when oil really looked unstoppable. It's
Right.
come back $30. Is this the stabilization that you were craving, even at these levels?
I think so. I think there's enough demand destruction going on in the U.S. market in particular, so everything's cooling down, if you like. People are recalibrating driving habits. All the things that we were hoping would happen is starting to happen. Now, stabilization is an interesting word. 110, 118, 120, 125. I think it's going to bounce around in those sorts of numbers for a little while yet.
Really? Long term, like many others, do you see the long-term trajectory still higher?
I do, because of where we are now, right? I mean, look, I was with some government ministers earlier today. They talk about an industrial economy. Music to my ears, right?
Yeah.
But it's an industrial economy that continues to need to industrialize. And even though they'll get energy efficient, and they are getting energy efficient, they will consume commodities, oil, etc.
Are you anywhere near a point where you could ease on some of the freight charges or roll back any of the price increases of the summer?
I don't think so. I mean, really, at the end of the day, if you take the average for the quarter, the price of oil for us is $130. So, you know, it did go up in a hurry, and it stayed up there for a while in the quarter. And I think, you know, we'll see what the next 3-6 months bring. If the demand destruction I just talked about continues to occur, then we'll look at what we do on the price increase side. And the freight surcharges, frankly, transportation costs are up, and I think they're going to stay up.
Is there a level at which you'll ask yourself those very questions?
Yeah, I mean, look, anything less than $100, I think we'll start, you know, really looking at it. Frankly, we had good volumes, even despite those price increases. I will say, though, the U.S. is weak, you know, and we aren't this bottom we keep looking for in housing. I mean, it's hard to see it, and Europe's weakening. So we'll watch very carefully. I think there is going to be some pressure on oil to go below 100, despite what I said. This is in the short term.
Interesting. All right, I know Michelle and Dylan and Tyler have some questions as well back home. Michelle?
Yeah, on that note, Carl, thanks. Mr. Liveris, good to talk to you. Don Strausheim is a guy that we have on frequently, talks about China, and he's just put out yet another note this morning. It's the second one in a week. He says China's macro statistics are going to look terrible for the rest of the year and into 2009. You're there in China. Do you think he's right? And if he is, what impact on your business and on the global economy if indeed China is weakening so starkly?
Well, you know, that's maybe I'm contrarian. Frankly, I've been here and I've really talked to a lot of people who are, of course, very much active in the China policy side. They are quite aware of what they need to do inside the country. We have a large project in the state of Shaanxi, province of Shaanxi. The urbanization of the inner part of this country, infrastructure, the earthquake rebuild. You know, there may be a little bit of a post-Olympic lapse, but I don't see it anywhere near to that degree.
So no evidence of a slowdown so far. If indeed it were to be true, what would that mean, though?
Well, you know, it'll mean many things, of course. That would mean, for a start, that the U.S. economy still is the heartbeat of the global economy. And as the U.S. consumer goes through its recalibration that we just talked about, then clearly China's exports will suffer. A little factoid, I don't know if you've picked it up, but the Chinese growth rate in the first half of this year, 2/3 of it was due to internal consumption, not to exports. That's a big change from, let's say, even last year, where it was 44% of the growth rate was due to internal consumption. So I still think Chinese consumers will still begin to take over, not immediately. Let's say in the 09, 10, 11 period, there'll be enough spend domestically where I think we'll still see a strong China.
Mr. Liveris, you want to talk Roman Haas?
Sure.
Oh, Tyler, you go ahead, please.
I've got a quick question. I'm wondering if you would ever consider being an Olympic sponsor.
Wow, where'd you get that question from? I'm impressed. Look, we are. You may know we are very big with the Olympics. The U.S. Olympic Committee, in particular, and U.S. cycling. We spend a lot of time at the Olympics with customers. I have 560 customers here in this last week and a half and this next few days, and we have sponsored Chinese badminton, and it's frankly something that we are looking at, and so that's why your question is prescient.
We have good sources from time to time. Roman Haas, you had to go on a big sales pitch to the street. They didn't like it at first.
Right.
Stock went to 31. You've called it beachfront property and have suggested that over time these deal premiums tend to get forgotten. Have you won the battle?
Well, we're back north of the pre-deal stock price, so that's a good sign. I've spoken to our top 20 investors over the last several weeks. In fact, I interrupted my Olympic stay to go back for investor meetings with all our large holders. Winning is a difficult thing in this sort of marketplace, but look, what really matters is not the point of the deal price. The deal price was what it was available at. This property was never available. This property transforms our company. This and the Kuwait deal.
Right.
We, for 5 years, have been saying we need to get away from a volatile earnings stream. Roman Haas will get us there, so we paid what we had to pay to change the company.
Are you done in the acquisition space?
Yeah, many people ask that question, which actually I find quite interesting, seeing we've got this big deal right in our imminent future to close.
Right.
But look, we're going to be strong post the deal. We've preserved lots of flexibility on that balance sheet. Having Warren Buffett come in and the KIA was really very good. Frankly, give us a year to digest, and probably the answer I should give you is yes, we are for now.
Yeah, I think a lot of the dissatisfaction came from the fact that Roman Haas shareholders did well, Buffett did well, and the payoff for Dow is going to be down the road, farther down the road.
Well, and acquisitions are like that. I mean, it's all about the synergies, really. Sure, it's the price you buy, but it's the synergies. We have got a tremendous track record delivering synergies. The Union Carbide deal, we delivered double the synergies we said we would, and frankly, Dow is very good at integrating acquisitions. We are already into the integration process. We'll close this in the early part of next year, and I think most of the people who own us will look at what happens in the first year.
We got to go, but one last question. You've been largely critical of U.S. energy policy. Now these suggestions that the Democrats would look at a vote on offshore drilling. Are you encouraged by that, or does a lower oil price mean that there's less urgency in Washington?
Well, a lower oil price, again, is a relative statement. I've said that on this show before. I am encouraged by what's going on in Washington. Look, it's not perfect. There's going to be compromises, but that's the way the process works. The fact that both sides of the House are now talking about drilling, it's about time.
It's great to have you, Andrew.
Nice to be with you,
Andrew
Carl.
Liveris, a favorite of the show.